And this lady had our first premium wired me $2.14 million to the insurance company. Okay. 2 days later, she called and said, I want to borrow $700,000. I said, fine, you're using your bank, right? A week later, I got a call from a carrier. They called me up and said, it's been a week, 8 days since your client took out a loan and she just paid it back. So I'm like, what? You don't take $700,000 loan and then pay it back in 8 days. So I called her up. I said, Rhonda, what's going on? She said, I just wanted to see how it worked. So she was connecting her intellect with her gut. And I said, this is a beautiful thing, because that's what we're really trying to accomplish with our clients so that they can really fly with infinite banking, is to connect the intellect with the gut. And it's a beautiful thing. And what a great example.
Well, Ken, thank you for joining us on the Infinite Banking Initiative.
Thank you for having me. Appreciate it.
Let's start off by just hearing your story and how you discovered the infinite banking concept.
Well, that's a great story. It came through the Mises Institute. I've been a student of Austrian economics for about 35, 40 years. Kind of got that from my father, who was also a student of that. And it was a natural outplay as being a financial advisor and being involved in the insurance and Wall Street. We'll put that generally. And as I got more into that, and then I forget who it was at Mises, but told me that I should listen to this speaker, Nelson Nash, because he kind of puts the whole thing together. And I did. And of course, it was a big light bulb for me, because suddenly what I was doing in my profession and what I was doing in my sort of private studies sort of all came together. And it was a super exciting time for me. This was in the early 2000s, and didn't quite do much with it right away because it didn't have my courage pill going yet, but I knew it was onto something, and kept listening to Nelson, went to a couple seminars. And as I said earlier, before we came on air, I was more of a listener than an interactor, because I really just wanted to soak it all up and take it in. And I was listening to other people's questions and listening and trying to figure that out. And then, of course, we came to a point where it was time to implement. And that was extremely important to me as well, because putting it into practice is what it's all about. I'm very dedicated to my client population and have been. I've been financial advisor for about 37 years. So it's a big deal to me. And I was excited to start to engage them in this conversation. And of course, I found out that there was certain roadblocks that a lot of people have in doing something different, and had to deal with that, sort of the psychology of that, and understand it. But it's been a great journey. And of course, meeting Nelson and engaging with him made all the difference in the world, 100%.
Well, yeah, share a little bit more about those roadblocks that some of your clients shift early on when you were trying to implement this.
Well, I have to say that in the early days of this, prior to that, my client population was mostly Orthodox Jewish people. I am an Orthodox Jewish person, and I just assumed they'd all jump on it. And I found out that there's no particular demographic out there that automatically jumps on this. And so that was my first roadblock. Well, why aren't you ready to, whatever? Typically speaking, Orthodox Jewish people are very good clients for whole life, but that doesn't mean they're very good clients for infinite banking. So I kind of had to get out in the world. And that was a daunting task, but has paid off beautifully. Have made some connections with, I guess you might say, the contrarian population. And I'm sure I've talked to you about that, David. And as I developed my practice in dealing with higher net worth clients who were looking for alternatives to Wall Street, I found out that they were a little more receptive to this than I had expected. And that's been really a very important part of my practice. But as I said earlier, I don't turn anybody away, because I'm going to just be frank. I'm on a mission to bring infinite banking to everybody and for them to enjoy and reap the benefits of it, which is sort of a level of financial freedom that they have never experienced before, and a feeling of transparency and integrity. And I say this often when I meet with clients. Wow, do you know that when I do infinite banking, I get to experience a phrase that we never got to experience in the financial community? They'll go, what's that? And I'll say, promises made, promises kept. What a wonderful thing to experience.
So you start off, you mentioned the term Wall Street.
Yeah. Well, when I say Wall Street, as for a certain period of time in the of my financial practice, I was a Series 7, Series 6, 65, 63, and a 28. That's commodities. And I was a registered principal of a brokerage. So I kind of rose to the pyramid of that occupation. And we had a secret saying in that world. And that was, we always make money, but you don't. And that's just not a world I could live in. And I can remember this very clearly in the late mid-90s, somewhere around that time period, enrolling a company, their employees in a 401k, and they're in their cafeteria. They're about 50 employees, nice sized company, a good case. I'm there with, they're now called John Hancock, but it was Manulife. They were the biggest 401k player in the country. And we give them a 12-page booklet, and the first 11 pages is filled with just not true statements saying you're saving for retirement. You're not saving for your retirement. If you went to a horse track or a casino, would you say saving for retirement? You're gambling for retirement. And then the worst experience of all was sitting there in the lunchroom and hearing one person say, oh, Evergreen Fund, I love the outdoors. I'm checking that off. Oh, Asia Fund, I love Chinese food. I'm checking that off. And I, realized that if they had come to me and said, which one's the best ones to check off, all I could do is make up stuff. And here I was an expert with every designation under the sun, every training you can imagine. And I was really good at it. I was managing a staff of financial advisors of 40, 50 of them at a time. So I'm invited to speak and stuff like that. And it's all just smoke and mirrors. And I just couldn't live that way. And then the pinnacle, and this happened, interesting enough, about a month before I met Nelson. I happened to see a client of mine at a grocery store, and I hid.
Hid behind the Cheerios aisle, huh?
Yeah, behind the Cheerios and the Wheaties. and then the first time I saw Nelson speak, I was like, wait a minute, I am not really sure what he's talking about. But when he's talking about financial freedom, enjoying a certain sovereignty that you wouldn't have otherwise, and this involves unleashing yourself in Wall Street and the banks and government control. I don't know if you recall, but Biden tried everything in the world to take control of our 401ks and IRAs. I shouldn't say are, because I don't have any of those things. But and he's talking about releasing us from these three things, learning how to mimic a bank. I didn't know what he was talking about, but I knew I wanted more. I'm like a kid in a candy shop. I wanted more. I can tell you that in my professional career, I've never been so excited in my life upon meeting and being exposed to what Nelson was talking about. I've never been so excited in my life. But it took me a number of years to get from an intellectual excitement to the courage to put my whole being into it, which I have, as you know. And it's been a great journey, little ups and downs. Sometimes when I'm in a down, I'm selling something to a client that I ended up wishing I hadn't. And I've tried to make amends, but we're smooth sailing now. If I see a client at a food co-op, it's hugs instead of hiding. Hugs instead of hiding, David. That's a good phrase, isn't it?
We write that down.
Yeah, write that one down.
That might be a good title for a presentation.
Yes. Hugs instead of hiding. It's a great feeling when you're in this business And, sad but true, I have many colleagues I had from, quote, the old days who still think I am absolutely crazy for what I'm doing. And because the herd mentality is a very strong thing, and thank God somehow or another I was able to escape from that. And but what people sometimes ask me, how come my insurance agent didn't tell me about this? How come my financial planner didn't tell me about this? And all I can say is the herd mentality is alive and living, and I'm not part of it. And I realize that my clients have to go through the same process, from intellectually seeing this as something important and something vital in their lives to being able to do it. And I'll tell you a story that will typify it. You'll get a good laugh out of this. David knows every now and then I come across a really large case. And this lady had our first premium wired me $2.14 million to the insurance company. Okay. And I know David's probably going to increase, only me, he's going to increase my membership fee. It's okay, David. I don't mind. I do mind. I do. And so everything's going fine. And then 2 days later, she called and said, I want to borrow $700,000. So I said, fine, you're using your bank, right? A week later, I got a call from the carrier, one of the guys I know with the carriers. And by the way, I only do business with our carriers that endorse us. I don't do business with anybody else, because if they're willing to endorse us, I want to do business with them. Anyway, they called me up and said, it's been a week, 8 days since your client took out a loan and she just paid it back. So I'm like, what? You don't take $700,000 loan and then pay it back in 8 days. So I called her up. I said, Rhonda, what's going on? She said, I just wanted to see how it worked. So she was connecting her intellect with her gut. That was my take on it. And I said, this is a beautiful thing, because that's what we're really trying to accomplish with our clients, so that they can really fly with infinite banking, is to connect the intellect with the gut. And it's a beautiful thing. And what a great example. I just wanted to see how it worked. She subsequently has taken many loans. She's in a real estate investment club, and she's brought me many clients, participants. Some yes, some no, but quite a few have joined up our network. And the other beautiful thing that happens is, the other day I'm talking to someone and they said they wanted to do real estate investing with their bank. And I said, the bank is for you. And all we ask is that you be responsible, try to pay back your loans so you can really do infinite banking. We will show you how much profit the bank will make when you do the loan the same way you do it with an outside bank, and show you how that money just increases your capital inside your bank. And they love that. And so I said, would you like to, I can put you in touch, and I made up that name, by the way, with Rhonda, and you guys can connect up, and she could tell you how she's doing infinite banking for real estate investment. It's like this. I love when that happens, because we're building that network and allowing a free flow of information through all of our family members. And that's kind of how I look at it. My family members are you guys, the other infinite banking guys that I know and cherish my relationship with, my guys that work for me. I can't even do this podcast without mentioning Josh Levy, because he kind of keeps me afloat. You guys know that.
The next generation, right?
The next generation, that's right. And we're working on a 28-year-old to succeed him. So why? Because I feel I have a fiduciary duty. I tell my clients, once you sign that policy, don't say goodbye to us. Keep calling us. Ask us to do your loan for you. Ask us to give you, if you're changing a beneficiary, or if you need to change how much you're putting in. If you need to do a lump sum, call us, because we know how to translate that to the insurance company. And I have to have succession. I have to have legacy if I'm going to keep that promise. Because as much as I like to think David and I are going to live forever, we know how it works. So,
I'm just getting flashbacks when you're talking about that. The early days, when I had we have a series of policies that we bought. Most of them are really small, It just they stacked up as if we had children and grandchildren and whatnot. And so, when you in the old days, it's like, hey, you request a policy loan, either you fax in a loan application and then you follow up with phone calls into the insurance company and they send you a check, okay, a loan check, and then you check your account and then you see the amount you borrowed, the principal, and plus all the interest is pre-charged for this one specific company. And then you come up with your own repayment schedule. And so you'll send, I used to send a check into the company, the insurance company, like not every month, but whenever we had the assets. And on the check, you had to write, say $5,000. You had to write, okay, $375 are going to interest payment. $975 are going to what you had to break it all down. And then on the check and then on the note, and then when you checked your account, it was all wrong. So then you had to get on the phone and straighten all that out. What a nightmare it was back in the early days. But you talked about a bank. It's not. We're talking about a contract that that mimics, okay, a bank. But in the old days, all that infrastructure wasn't there. But a lot of these companies now have it down pretty good, where you can do all this online, and you can when you pay, that is like, okay, this is going here, here, and here. And it's done right. So that's important. And you also said about insurance companies that support IBC. We're talking about companies that routinely attend our annual member programs or things, and they sponsor a meal, they sponsor whatever. And they're there to make sure that we're doing the right thing and we're not talking crazy things, and we try to stay compliant as much as we possibly can. But that's always a challenge, right?
Yeah, of course. Yeah, that you brought up a good point, though. They in and of themselves have come a long way. These guys that support us, these carriers, because they know better now how to handle us. We've gotten them somewhat trained that some of our clients who are contrarians, not just in the financial world, but in the medical world, that they don't go to doctors. And we tell them, look, if you don't go to a doctor, we can work with that because we're going to go to the MIB. They never heard of it. We explained it to them. But you're going to be doing a blood test and a urine sample because I can't do both. You can't get out of both things. No doctors and no paramedics. So I have to kind of educate them. And, I've had one or two that wouldn't do it. One of them said to me, how do I know you're not taking my blood and selling to CIA and putting a mutant gene in it and putting it back in my body? And I said, well, I've attempted that, but I couldn't get it back in the person's body. I mean, sometimes you just have to, whatever, you're not going to be able to please everybody, of course. But the key thing is that we have built a relationship with these carriers, with 2 or 3 of them that we use mostly, where we're on a first name basis with the underwriters. They know exactly what we're doing. When I send them a narrative for an illustration or something, I just put IBC and they just know exactly what to do. Sometimes they'll come back and say, what kind of split you want on a PUA and so forth. But I often tell my clients that in 1995, I bought my first whole life policy. I didn't know anything about infinite banking. I didn't know anything about PUA riders or any of that stuff. It was $350 a month. It's 30 years old. I've been paying $350 a month. Somehow or another, I've never missed a payment. I still pay $350 a month. And I did an in-force years ago, and it said that after 30 years, I'd have $280,000 in my cash value, but I have almost 400, and that's because of doing loans and paying them back at market rates.
How do you get more money back in the policy doing loans?
That's a good question. I actually had to ask when I started doing that. I'm thinking early 2000s. I asked for them to put a PUA. It was Security Mutual, and they somehow worked it out for me.
Oh, so you had an open PUA rider that
just did never
had plenty of room in it to put additional premium in there.
They had to ask me the 3 deadly questions. Do you smoke? Are you on hard drugs? Has a doctor told you you're going to die in the next year or so? And as long as I said no to all that, they approved it.
Well,
That was pretty easy for me to pass.
Yeah, no, I hear you. It's
Yeah. So, and we've grown with them as they've grown, because a lot of medical things have changed in underwriting. As we all know, marijuana isn't treated like it used to be. It used to be a deny, and now it's more like a tobacco rating if it's extensive and stuff. I've been through all of these wars, and I love what I do. I'm 76. I'm not retiring. I'm never retired. As long as I get to do this fun stuff and meet interesting people and be associated with interesting people like you guys, why in the world would I want to go out on the golf course all day? It's just not interesting to me, And I love that I'm challenged all the time. There's, the minute you think you know exactly how to do this is the minute someone comes along and throws a wrench into it, and you got to kind of figure it all out. And I love that stuff because, it makes my life exciting and interesting. Plus, I'm on a mission, right? We're on a mission, guys. Come on.
Well, our mission for the audience is to have a certain percentage of the American and Canadian public utilize privatized banking. Okay. Outside the centralized banking nexus known as the Federal Reserve in the United States. And because they're working with hard currency, the insurance companies when they send you a policy loan, they're not electronically making up money like, FDIC insured banks do. So it's non-inflationary. Plus you maintain the individual who owns the policy, owns the contract unilaterally within a private insurance company, is keeping that flow of money in their control. They're not losing it, and that's what helps that policy grow that you had from $280,000 cash surrender value to $400,000. It's ridiculously simple, right?
When someone tells us they want to do a PUA and how much they want to do, we always put it in for about 20% more so that they can pay loans back at full interest rates instead of at the interest rate that the insurance company is charging. And sometimes I get a little pushback on that, and I tell them, when banks lend money, they have to pay for it too. They're not getting it free. Even if they're getting it from the Fed, they're paying the prime. There's no way around that. So we're just doing the same thing. We've developed software that, for example, someone goes to, to buy an SUV, and they tell them it's $42,630 a month for 5 years. We tell them, but make a loan for $42,000 and we'll create a schedule for you at paying $630 for 5 years. And we're going to show you exactly how much profit you're going to make on that deal. And they love that. They love it. We've created software to do that, which, by the way, I might have mentioned this to you before, David. That software is purposely non-proprietary. We make it available to any other advisor who would like to have use of it. We're happy to do that. Kudos to Josh Levy for having put that together. Again, having good people. By the way, I'd like to bring up something in how do we expand our agent population, because that's really one of the toughest things. We are not employees of an insurance company, and that creates a dynamic financially that's very different. We're commission-based only, and we're very proud of that. And so I tell a new guy, I have this guy, 28 years old, who's totally into infinite banking. Pretty soon I'm going to refer him to you, but I'm not quite ready. And I said to him, you want to be successful in this business, do exactly what I did when I started out. He goes, what, Mr. Shapero? And I said, I was a waiter at a restaurant 5 nights a week for 3 years till I could build up my book. And he's doing that. 99% of them go, well, nah, I'll go work for a Guardian. So long, and I'm not putting that down. That's just not goes against my entrepreneurial blood. So that isn't going to happen in my world. But if people need to do that, they could do that. And they're going to get a pretty good education, but they're also going to get a big miseducation. And I know some of the bigger companies do. There are people do infinite banking with them, but they have a message that's not our message that they give to their agents. And It's, so some people take us up on it. Most don't.
Yeah. I don't know any, well, I don't want to say this, but my feeling is there are no authorized IBC practitioners that are captive agents. There's a playbook they have to stay with, like you suggested. And there's a lot of YouTube noise out there, and these experts say, if you don't do business with the top four, the big four, then you're wrong, because they're the oldest, strongest mutuals out there. They have the best dividend payback, That's not what's important.
No, being able to do this arbitrage, that's what's important.
Yeah. If you buy a policy and put it in your safe and lock your safe up, and then when somebody dies, you pull it out, then you might have a great death benefit. But if you want to use it constantly, use your contract, use your policy, then you got to have the right type of company that's flexible, understanding, and allows you to do the right thing by your clients.
Well, and also that they have a business model that seeks out loans, that wants to do loans. For example, the big four, their average percentage of loans in their portfolio is about 2% or less. And some of the companies that endorse us, the average loans in their portfolio is over 20%. Now, to do that requires them to sit around and figure out, how do we make this work in our business model that makes everything spin, paying dividends every year and so forth. And they've obviously figured it out, because they're inviting us to do loans. And those are the guys I want to work with.
Well, they also, if you look at the history, the history of policy lapsing and the relationship of lapsed policies with outstanding policy loans, it can be alarming. But if you drill down on that, I suspect what you'll see is individuals who don't know what they're doing, customers, policy owners who don't know what they're doing, will turn on a premium offset or turn on something where their policy loan will pay for their premiums. And then when they get to the point where their loan is substantially more than it needs to be, and they can't pay premiums anymore, whether they just walk away and let the policy lapse. So the companies are afraid of that, and by rightly so. But the companies that understand IBC and that they have responsible, authorized IBC practitioners who educate their clients on how to responsibly leverage the cash surrender value and the loan capabilities policies, the lapse rate is significantly less than the general population. Number one, and number two is, these companies like these clients because they have a portfolio that they have to have a predictable return on their investment, so they can pay their obligated expenses, death benefits.
Well, they have an audit committee that's looking down their neck and making sure of it. And if they didn't adjust their business model to accept more loans than they used to, they're going to be in trouble. And so, that's the difference. Another thing I'm bringing up, and I got to give kudos to, because he's been a part of my education, is, and I'm not trying to necessarily endorse one company over another, but Marty Smith has been tremendously helpful to me. He is a true believer, and he's even a slightly thorn in their side at Security Mutual, but because he's very enthusiastic about what he talks about. He's been a great source of information for me, and I can't thank the underwriters of the various carriers I work with, because they've just been awesome. Because I do ask for favors and exceptions once in a while, but I don't exploit it or overdo it, and I don't do it through lies or anything like that. I'll tell you a quick story. I had a guy call me up. He's 45 years old. He's married and has 4 kids and owns a Goodyear tire center up in Wisconsin. I said, "Why are you calling me?" He said, "I was referred by somebody in Florida that you could help me, and maybe you can. I've been turned down." I said, "Well, tell me your story, because so far you sound pretty good, right?" He says, "I'm a convicted felon. When I grew up in Compton, South LA, probably the worst neighborhood in America. I was in a gang, and I was in an armed robbery, and I was the driver. I didn't even have a gun, but In California, if you're in an armed robbery, probably in every state, everybody gets the same penalty. He got 8 years, and he went and got his associate's degree and got a bachelor's degree and got his act together and so forth and so on. So I called a chief underwriter at 2 of the companies I work with, and I just yelled at them and said, look, isn't this America? Don't we give people a second chance? And I was fighting hard, and they both approved him. He didn't know anything about infinite banking, but once I got him approved, I said, by then I was like, I was walking on water as far as he's concerned. No offense to my Christian brothers. And I was able to invite infinite banking. By then, his receptors were open. It was easy. And so, of course, we did an infinite banking, then we did one for his wife and so forth. Another thing that pops in my mind, and if I don't say it, I'll forget it, is that I am doing, you ready for this? Is just the most wonderful thing to share. I am doing infinite banking with the adult grandchildren of my initial clients.
All the ones you're hid from in the grocery store?
All the ones I hug in the grocery store. No, not those. But, I started doing infinite banking kind of 2004, 2006, something like that. And since some of them already had adult children. And then now I'm doing the adult grandchildren. And that's tremendously satisfying that the message has crossed over the generational lines like that. And one of them is funding it with the grandfather's death benefit. So we're moving it along, keeping it happening. And that's kind of, I remember Nelson talking about that, and Lynn Rainier, he's been a great help to me as well. Talks about legacy and so forth. So I try to get it wherever I can and learn. And sometimes people will challenge me about infinite banking. I said, look, if you can find a better chassis to do private banking, I'm all ears. And so are my compatriots. We'll be happy to listen. Of course, no one has mentioned what that would be, but we want to learn, don't we?
Well, everything you've talked about today is it's in becoming your own banker. Okay, all the life lessons, the human behavior, even to some degree, policy design and loan repayments and stuff. It's all in the book, but you're bringing like reality to it for your experiences. You're 20 years in IBC.
And if anything, to share that with newer guys or anybody, because I learned from James, I learned from Ryan Griggs, and he's like, I have grandchildren almost his age, and I don't care. Wherever I can learn it, I will learn it. And just really quick, what a delightful contribution to our world is the book he put together. Isn't that? It's tremendous. I've enjoyed reading every page of that. And of course, he'll say, he's the first to say everyone has a slightly different take, but his take was just so educational and so useful. So certainly other IBC guys should take a look at that.
That's the Bible for dissecting a whole life policies and how everything works and what it's all, the proper nomenclature and the relationship of everything. There's so many moving parts in that stuff. If you change one, it's going to affect something else.
And we always have to be very sensitive. Illustrating policy for a client is so important, and also to share with them, look, this is not the end all be all. You can look at it with me and let's change it if we need to. Let's make it look better. Let's do what we can. But and I'm very upfront about, I don't do 90-10s or I guess it's called 10-90s, because we know what happens after 10 years. It's not going to do what it should do. So we got to get that balance correct. And I educate them. I'm not, in your case, I'm not going to get you whole until the 9th year. Maybe I'll do it in the 7th, but whatever it is, if you follow Nelson's guideline, patience and discipline, you're going to win at this game. You will be a winner. And use us as your coach. We are your official second opinion because you're them in charge. And that's kind of how I approach it with them. My whole thing is to empower them. And do you know something? Recently, the past, I'm going to say 6 months, I have been discovered by divorced women.
Wait a minute. I wanted to have a personal talk with you, but I don't know if I'm going to go that personal or not. But
No, I'm telling you, ladies who are recently divorced, because as you can imagine, it's not uncommon for them to come out of divorce and realize he handled all the finances. Now what do I do? And it's quite satisfying to be on their side. I'm not against the other guy, but they're already in a settlement. She's already received X amount of dollars for whatever. I don't get involved in that at all. But it's like, where do I go from here? And they don't know. And it's quite nice to be able to be there for them in a positive way. And I don't do, I'm not a hardcore salesman. And I think that also makes them feel, it should make anybody feel good. Who wants to be around that? My dad used to tell me, we follow the 10 commandments in our religion. I said, yeah, Dad, I know that. But don't forget the 11th commandment. I said, what's that, Dad? I was 12 years old. He said, thou shalt not be a jerk.
What did your father do for a living?
My father was a small businessman. He came out of World War II. He started working in a commercial laundry as a bookkeeper. And after 2 years, the owner said, I'd like to retire and I will sell it to you, but I need $5,000 down payment. And he then worked at a stockyard from 12 at night till 8 in the morning to raise the $5,000 because he already had a family. And he bought the commercial laundry, and his clients were hotels and restaurants, doing their linens, doing their towels. We had big, huge machines. We called it the plant where his office was. And I have 3 brothers. I grew up in Louisville, Kentucky, and all 3 of us, myself included, never got an allowance. You made money by working for your money. And I remember when I was 22 years old, I went out to California, as that's what everyone was doing in the late 60s. And of course, I couldn't find a job. So I called my dad, first time I made a long distance call in my life, and I asked him, could he lend me $50? And he said, why don't you just come on home? I said, because this is where I live now. And he goes, okay, well, I'll tell you what I'm going to do. I'm going to have a $50 ticket at the Greyhound bus station in Will Call. It'll be there by noon tomorrow. And you could take a bus home, go to the plant, work there for 3 days. You could sleep in the fresh, clean laundry, and then come on by for dinner. And that's what I ended up doing. Yeah, those are the lessons I learned, David. You get nothing for free. He told me, when I get married, I'll give you a check for $500 and a brand new washer and a dryer. And I'll be doggone. That's exactly what he did. I said, what about adjusting for inflation? He said, I never said that.
The laundry piece is consistent with a wedding gift. I like that.
Yeah. So that's how I was brought up. And we had a small laundromat at one point. And on Sunday afternoon, I would count the money. You're going to love this. And I said to him, Dad, if I find a coin in the account that's, like an 1878 dime, I'm 14 years old, whatever, can I have it for my coin collection? He said, yeah, as long as you put a dime into the pot so that my count is accurate. Okay. So those are my lessons that I learned, and it has served me well.
So it sounds like your father, Nelson, would have got along.
Oh, yeah.
Great.
He met Murray Rothbard at a talk. He was in Las Vegas with my mom on a vacation, and he was talking, and I guess he'd read about him. He went to hear him speak at University of Nevada at Las Vegas, which is where he was on faculty. So he was, he was a real free enterprise guy. So it was easy for me to jump into the Mises and look, I have a whole library of Ludwig van Mises and Murray Rothbard and many others. And to me, I see infinite banking as just an extension of that. And you remember, what was it, 4 or 5 years ago, we had, I can't remember his name, but he was the executive director at Mises come and talk with us at the think tank. And he said the exact same thing. Infinite banking is the practical extension of Austrian economics. And that just tied a bow on the package for me, because that's why that was where my receptors sort of started out.
Yeah, but buzzword, sound money solution, buzzword. One of the planks in the platform is privatized banking. But yeah, I never met any of those guys. Ralph Rako, he was one of my instructors at college. I didn't know anything about it then. When I read a couple of his articles like 10 years ago, wait a minute, this guy's name sounds familiar. And sure enough, he was a professor at Buffalo State College, and was like, wait a minute. Yeah. So I took a history course from him, and it was supposed to be on colonial America, but what it was on was about, the Declaration of Independence is what it was on, and what that really meant. And it's like, well, and this is like 1972 or 3 or something like that. It's like, so that was my first unknown brush with Austrian economics, was with those guys.
It's awesome. It's a it's a little wonky, but it leads you to the right place, and that's what counts. And it's, in a sense, if you can strip all the jargon out of Austrian economics, it's just common sense. But as we all know, common sense isn't very common anymore.
No, it's common sense. That's why I love the name, human action.
Yeah.
It's common sense. It's flow. It's free flow. Don't obstruct the flow, unless you want to make a dam and generate electricity. But,
I agree. So, all of these things have been, I see them as my stepping stones to where I am now. And I'm looking for new stepping stones, not to leave Infinite Bank, to expand my knowledge of it. That's why when Ryan, that book was sitting out there, in the lobby, I just automatically purchased it, just assuming if I can get a couple of tidbits out of there, that's going to be awesome. I loved his little thing where he used kind of an age bracket as to where you do the ratios of premium to PUA. That was helpful. I mean, it's not in stone, it's not religion, but it's helpful to have those guidelines. And I appreciate that he thought it through to put it down in writing. And because we have to be very sensitive to that. We do less aggressive the younger you are, because they have time on their hands. I'm working more and more also with 30-year-olds, and that's a whole different thing. And that's tremendously rewarding when they get that, and I usually, if they have a family, I'll put a term rider in there just to make sure that they have protection. I have that, I am an insurance agent. And I do have fiduciary duty to protect my clients and their families. And so I do integrate that into Infinite Banking so we can do it all, so to speak. And so I guess in one little way, you might say that is also what I do besides Infinite Banking, but it makes sense.
I mean, don't get me wrong. I am a huge advocate of death benefits protection. It's so critically important. It's so critically important. And we keep talking about Ryan's book. So formal plug, How to Buy Whole Life Insurance. Okay. A Framework for Becoming Your Own Banker by Ryan Griggs. Just, you can Google it, and it's fantastic. I think it needs to be mandatory reading for any life insurance agent, to tell you the truth.
It's a tremendous, useful to our little, I would call this our subculture, our industry. And I'm also very happy to see more people signing on and going through the course. That also gives me encouragement. We're never going to change the herd mentality, but there's enough people out there that really do investigate and ask questions, and this is what gets us to where we are. It's awesome, I remember when Ryan used to come, his mother would come with him, right? So, we've all come a long ways. He's an awesome guy. What are the misconceptions about Infinite Banking? And I would say that these are things that I do deal with a lot. Number one, and this is just a whole life or even a permanent life misconception, and that is that no, when you pass away, your beneficiaries are not getting the death benefit plus the cash value. And we go through the home equity talk and explain that to them. And once they see that, they kind of get that. And And then we talk about net amount at risk. I explain that to my clients. It's important for them to know you are going in underwriting not because of the cash you're putting in. You're going into underwriting because of the external rate of return you're going to someday a loved one is going to receive. And that is the death benefit. Oh, yeah. Now I remember what I have delivered a few times. I've delivered checks to grieving loved ones. And I will tell you this, I tell this to people so they get it, because a lot of people coming in infinite banking, they don't really care about the life insurance part. So I need to educate them that they need to care about that. And this is a little funny thing I'll say, but it is a true thing. I've never handed a check to a grieving spouse and ever have her look at the check and say, wow, Dan left me way too much money. What did he do that for? That never happens. They may be grieving, but their grief goes down when they see the check because they know they were thought of. And of course, they knew while they were alive that he had life insurance and stuff, but it doesn't hit them until it hits them that there's this check for $500,000 or whatever it might be. And that's a powerful thing. And I educate my clients in that because I want them to know, may I quote Marty Smith, that whole life insurance, when it's done as infinite banking, is truly the Swiss Army knife of financial instruments. I love that. When I hear things like that, I pick up on them, I add it into my repertoire, and I share that with my clients because I want them to I want them to know that not only are they eating a wonderful, tasty cake, it's also very nutritious. It doesn't have junk in it, or whatever, metaphor I can come up with at the time. So that's one of the misconceptions that I educate my clients on. And, they appreciate that because they feel empowered when they have more knowledge, and it's a knowledge they can understand. Some of them tell me they have, and this is a little bit of a knock on us, that they have met with an infinite banking person. Of course, I don't know if that was a Nelson Nash Institute trained infinite banking person, but that they talk too technical to them and they can't follow them. So, of course, that's something we have to constantly watch for and be educated about, that when the person comes into your world, there's a good chance they're very successful at what they do. You might be meeting with a lawyer or a software engineer. They're successful at what they do. And in a sense, they're just as successful at what they do as you are with what you do. And you have a duty to make this understandable to them because they're coming to you with their hat in their hand. You can't go out and buy this on your own like you can a 57-inch widescreen TV at Best Buy. You cannot do that. You have to go through us. And so sooner or later, someone has to humble themselves and reach out to one of us one way or the other. And so, by God, you better be real, real sensitive to that.
Exactly. And, James talks about it. You got to meet them where they're at. And some people, some folks will come to you and they say, I heard of this IBC thing, what's it all about? And they want you to tell everything about it to them. And it's like, wrong. You don't waste your time, spending an hour explaining everything to them. Just say, listen, if you really, the only way you're going to find out about IBC is if you take the time to read Nelson's book. 3 hours to do it. And because if you don't understand what this is really about, then you're not going to be a good client to drag around. Right.
Well, I teach my agents, there's 3 concentric circles of clients. There's the circle closest to you, which is someone who says, hey, I read Nelson's book and I'm really interested. How can I implement this? That's the closest circle, but it's the smallest circle. The next circle is, I heard about it. Tell me all about it. Just like you said, that's the second circle, and that your chances of being successful with them go down drastically. And then the third circle, which is the largest, is by term, invest the rest. Now you tell me why I shouldn't. And they sort of say it in an aggressive, hostile way. And I tell my guys, moveon.com. Move on. Say, read out Nelson's book, or maybe go on a YouTube, the Nelson Nash channel, because there's tons of YouTubes there. And, see you later. And sometimes, once in a while, I do see them later, but mostly not. The second circle, there is hope. Sometimes you do hear from them later. They buy the book. But the first circle is who you're really going to end up doing business with.
Well, we here at the Institute, we created the foundations of IBC video series back in, I guess, 2020. And the intent was to introduce IBC to folks and encourage them to, buy Nelson's book, Become Your Own Banker. So we offer the first 4 modules for free. And then if they want to watch all 16 modules, they have to make a substantial investment of $49.95 to watch all 16 modules. But the intent is just to say, okay, just walk through it. And so it's really refreshing to watch, your inbox pop in there. Boom, somebody just subscribed to the intro series free. And then like 2 days later, boom, they just spent $49.95 to watch all 16. Boom. And then 2 days later, they buy Nelson's book. It's like, okay, this is working as planned.
I applaud you for doing it that way because it's really great. You give them the 4 for free and get them going, they get a taste of it. And then if they're interested, it's sliding $49.95 with a credit card is no big deal. And if they're not interested, then that's the way it goes.
Or, and here's something that our practitioners don't take advantage of as much as they should. They can watch all 16 videos for free. All they have to do is contact an authorized practitioner like Ken Shapero and ask for a code. Right. There you go. Any practitioner, not just Ken Shapero, but anybody. And they're all, hey, I'm plugging too much today, Ken. I don't know what's wrong with me.
And I can't emphasize this enough that every time someone starts doing infinite banking, they're part of my network, my community, and I share information. And sometimes I will do YouTubes where we're dealing with, infinite banking for real estate investors and let them talk. I don't need to be the guy spouting off because they know more about implementing that with their loans than I do, because that's their world, that's their profession, or other types of things. I got guys doing startups. They'll ask me, well, should I put the money in and then invest in my startup or just invest in my startup? And I explain the pros and cons. I do not tell them which to do. I explain the pros and cons. And, if you're working with a non-direct recognition company, which I don't usually use that term, but I explain what that means. You can get a little piece on the arbitrage, but, you have to kind of know what you want to do. The other thing is people always come to me. I've got a 401k or an IRA. I'd really love to put it in my infinite banking policy. And I'll tell you, when I'm meeting the first time, I'd steer away from that because I feel like that's another big jump from intellect to gut. And maybe that's not something we want to do. But, I can do 72T with them, equal periodic payments, and let that pay the premium. And then they can put lump sums in along the way if we create the PUA correctly. And I've done that many, many times. But I'm very, very careful about that because, that's going to cause a lot of feedback in their family.
Well, you also got to be careful if you don't hold the right licenses to talk about qualified plans and stuff like that too.
Well, it costs me money, but I have all the licenses.
No, I'm not talking about you. I'm talking about general terms.
Sure, of course. You cannot give information. And then they'll ask you tax information. I'll say, if you're in Florida, I know a good tax attorney. Here's his phone number. I don't take any kind of referral fee from him. I don't want to be exposed, and he don't want to be exposed. What I say, give him a call. I just don't do that, unless it's settled law. They say, what's settled law? And I will tell them, you're driving down the street, you come to a traffic light, and the light is red. That means you must stop. That's settled law. It's not up for discussion. So if they ask me that, is an IRA tax deductible, a traditional one, I can say yes to that, but I'm not going to get in the weeds on any tax questions or accounting questions. There are plenty of guys out there who are my infinite banking clients that do those professions. Let them, and that's how that goes. That's just another aspect of what we don't do or do, however you want to say it. So I'm thinking in my mind, other misconceptions. Oh yeah, how come I haven't heard about this? Now, a person can say that 2 different ways. They can say, gee, it's funny, I'm 47 years old. How come I haven't heard about that? That's one way of saying it. And the other one is like they got 2 6 guns, 6 Colt 45s in their hand. How come I haven't heard about this? And you have to take a different tact with that, and you have to give them an answer. You got, because that is a common thing that I hear about, and that's their way of telling me there's some legitimacy to what I'm offering, or else they wouldn't say, "How come I haven't heard about that?" And so I have to take that into account in my mind and just focus on the legitimacy of infinite banking. I don't actually answer their question because that's not what they're really saying. They're saying, explain to me a little more the legitimacy of infinite banking. And sometimes people don't say what they mean, and you have to kind of catch on to that. As you could probably tell, I'm a student of psychology. I've never read a psychology book in my life, never taken a course of that in college, but I try to pay attention to what's going on behind that. I sometimes listen to YouTubes to some of these motivational guys because they can be pretty good. You get something from everybody. I'm not signing on. I'm not going to be a follower, but you get something from everybody. Oh, I take that back. I'm a follower. I'm a proud follower of Nelson Nash. May he rest in peace. I love him. Happy to say it.
That was important. The man on the mission.
Yeah, because he put it together, and I'm eternally thankful and grateful to him. And I revisit his YouTubes all the time because it's always about keeping the bucket full as much as you possible, because you can do a better job with your clients if you hear it from the source. And I love David. I love hearing you. I love Carlos. I love Bob Murphy. They're all part of the package. I'll tell you a funny story. Back in the day when I was still doing other stuff too, I was doing a particular foreign investment, and the law was you had to take a check from the guy not in the US of A. So I flew to the Bahamas to meet him. He flew from Charleston, South Carolina. I flew from Fort Lauderdale just to meet him and have him hand me a check. Now, there were a lot of people who were doing that just pretended they did that. But I do like to do things legally.
This has been recorded. You know that, right?
Yeah, it's okay. It's
okay.
legal. It's totally legal.
Okay.
So I get the check. I'm in the airport. My plane leaves in 6 hours to go back. And I brought with me on the plane forget the exact name, How to Private Banking with Carlos Lara and Bob Murphy.
How private banking really works.
Yeah, thank you. And I started reading it, and I could not put it down. And that airport was not air conditioned. It was in the summer. And then it's going to be delayed an hour. Then it's going to be delayed an hour. I was there for 10 hours. I read the book twice. And that's just how I am. When something makes sense, I don't let go. And of course, to me, that was a tremendous contribution. And to me, especially because they connected the dots between Austrian economics and infinite banking in a wonderful way and gave us so many tools. But something, you read that and you still come out of it. Well, how in the daylights do I implement this stuff? And that was still there. And in a way, we all had to figure that out. And a little bit, we had to figure it out on our own because we weren't quite there yet. And contributions like Ryan has helped a lot, and great speakers in our think tank conferences and Nelson's Nuggets and different things, all those things have added to it. But to a certain extent, the old timers, and I think can I qualify as an old timer? I still feel like a newbie.
You're an old timer.
Okay.
Not by your age, but by your years invested in the IBC community. Yeah.
I had to figure it out, trial and error, made a few mistakes, but we got there. We got there and we know what we're doing now. And when people say that I talked to 3 or 4 guys, and I do have people, I did infinite banking. I said, okay, so then you're probably in good shape. Would you like me to look at the policy and just see if it's healthy and working right? And they'll send me the declaration page, and it's an IUL, and there's no PUA or the equivalent of that. They put $40,000 in per year for 2 years, and they have no cash value. It's very difficult to tell them. I will say, keep the policy, at least for a while till you get your money back. It might take a long time. See if you can lower the premium on it and let's go forward. It's very tough, but these are things we have to deal with. We have to deal with all kinds of stuff, you know. That's we're in the trenches. But that's what makes our community vibrant and rich, is sharing this stuff, which is why I appreciate you inviting me on, and I'm happy to share my experiences. I don't want to necessarily call it wisdom, but I'll say experiences. And if it helps another fellow or lady who's doing this stuff, then so be it. It's great.
Thank you so much, Ken. We really appreciate all that you had to share with us today. You certainly have a lot of experience, and I think a lot of people will benefit from the stories that you have.
Okay. I can't believe I just looked at the time. I really thought I was embarrassing myself by not having anything to say after 20 minutes, but I realized we put together a good hour, didn't we? Okay. I thank you guys. Lee, as always, thank you for getting this stuff, make it happen. And David, I thank you so much for your guidance and your leadership with Nelson Nash Institute. Forever it may be healthy and grow. And anytime I can be of service, let me know. I'm happy to help out.